banks are one of the few businesses almost everyone uses. Whether you have $10 in your account or 10 million, you can walk into the same branch, use the same ATM, and download the same mobile app. At first glance, it seems like every customer is treated the same. But that's not always true. As your financial situation changes, your relationship with the bank changes too. The products you're offered, the interest rates you qualify for, and even the level of service you receive can all change over time. So, at what point does a bank start seeing you as more than just another customer? Today, we're following that journey, from a negative balance to millions of dollars, to understand how banks typically treat customers at every level of wealth. Let's start at the very bottom. Level 1. Negative balance. Imagine opening your banking app and seeing -$200. For many people, this happens after an unexpected expense or a paycheck that arrives late. To the customer, it's a stressful moment. To the bank, it's a sign that the account may be under financial pressure. At this stage, the bank becomes more cautious. Overdraft fees may apply. Some payments may be declined. Getting approved for new credit can become more difficult because the bank sees a higher level of financial risk. It's important to remember that a negative balance doesn't define a person. People can end up here for many different reasons. But from a bank's perspective, the goal is simple. Reduce the chance of losing money. Level 2. $0 to $1,000. Now imagine the balance is positive again. The account stays above zero and paychecks arrive regularly. This is where financial stability begins. The banking experience is simple. You have a checking account, a debit card, online banking, and access to basic financial services. The bank is quietly learning about you. Do you receive regular income? Do you avoid overdrafts? Do you pay your bills on time? Every month of responsible banking helps build trust. Nothing feels very different yet. But behind the scenes, your financial profile is improving. Level 3. $1,000 to $10,000. For many people, this is the first major financial milestone. An emergency fund starts to take shape. Unexpected expenses become easier to handle without immediately borrowing money. From the bank's point of view, this customer is becoming more financially resilient. Someone with savings is generally less likely to miss payments after a temporary setback. That can make it easier to qualify for better financial products over time. Maybe a credit card with better rewards. Maybe a personal loan with more favorable terms. The biggest change isn't the products themselves. It's the relationship. The bank no longer sees someone who is simply managing today's bills. It begins to see someone who is planning for tomorrow. And that's where everything starts to change. Because once your savings continue to grow, the bank's focus shifts from managing risk to building a long-term relationship. By the time your savings reach 5 figures, something important begins to happen. The bank is no longer focused only on whether you can manage your money. Now it's thinking about how to keep you as a customer. Level 4. $10,000 to $100,000. At this stage, you've built a financial cushion. You may own a home, have a steady career, or regularly contribute to investment and retirement accounts. From the bank's perspective, you're becoming a reliable long-term customer. This often means easier loan approvals, higher credit limits, and access to better banking products. The bank may even begin recommending investment accounts, mortgages, or financial planning services. It's no longer just providing a place to store your money. It's trying to become your primary financial partner. Level 5. $100,000 to $500,000. Crossing six figures is more than just a personal milestone. It's also a milestone for your relationship with the bank. Customers at this level often qualify for preferred banking programs. That could mean shorter wait times, dedicated customer support, lower fees, or better borrowing terms. Why? Because customers with larger balances often use more financial products and tend to stay with the same institution for many years. To the bank, that relationship becomes increasingly valuable. Instead of waiting for you to ask about new services, the bank may start reaching out with offers that fit your financial goals. Level 6. $500,000 to $1 million. This is where the banking experience begins to feel noticeably different. At many financial institutions, customers in this range may gain access to private client or wealth management services. Rather than speaking to a different representative each time, you may work with a dedicated relationship manager who understands your financial situation. Discussions shift away from everyday banking. Instead, they focus on topics like investing, retirement planning, estate planning, and preserving wealth. The goal is no longer just helping you manage money. It's helping you grow and protect it. And that's exactly why banks invest more time in customers at this level. Not because they're treated as more important people, but because they've built a stronger and broader financial relationship. By the time someone reaches this stage, the relationship with the bank has changed completely. The conversation is no longer about opening a checking account or applying for a basic loan. It's about managing and protecting wealth. Level 7. $1 million to $10 million. Reaching $1 million doesn't automatically change your life overnight, but it often changes the way banks work with you. Many banks offer private banking or wealth management services to clients who meet certain asset requirements. Instead of focusing on everyday transactions, conversations often revolve around investment strategies, lending options backed by assets, retirement planning, and estate planning. The bank wants to make managing large amounts of money as simple as possible. The goal isn't just to help you earn more. It's to help you preserve what you've already built. Level 8. $10 million plus. At this level, banking becomes highly personalized. Clients often work with teams that may include relationship managers, investment specialists, and lending experts. Banks understand that these customers have many choices. That's why they compete to earn and keep the relationship. The focus shifts from selling individual products to providing long-term financial support. For the bank, retaining a client with substantial assets can be far more valuable than attracting dozens of smaller accounts. Looking at every level, one pattern becomes clear. Banks don't simply treat people differently because they're wealthy. They adjust their services based on the overall financial relationship they have with each customer. As savings grow, borrowing history improves, and more financial products are used, banks often offer broader services, more personalized support, and additional opportunities. That doesn't mean someone with a smaller balance can't build a strong financial future. Every millionaire started somewhere. For many people, the journey begins with something as simple as getting out of a negative balance, building an emergency fund, and making consistent financial decisions over time. The biggest lesson isn't that banks change. It's that your relationship with the bank changes as your financial life evolves. And understanding that relationship can help you make better financial decisions, no matter where you're starting today.